let's, turn it back to the markets, right? The GIFT Nifty should come up on your screen. Take a look at what's happening. Ed Yardeni, president of Yardeni Research, and Arvind Sanger, managing partner at Geosphere Capital Management, are with us. Thank you very much, gentlemen. Great to have both of you here. First up, Ed, when will we know the results? And actually, let me rephrase it. When will markets be able to trade the election result? In how much time?
Well, the polls have been so close that maybe the only thing the polls have been predicting is that it's going to be so close that it'll be a few days before we know for sure. So it's hard to say, but I would say we're not going to know tonight.
Okay, but we will. You're saying that we will not know for the tonight. So we probably will have to come back. U.S. market session for us here in Asia, we'll only know later tonight.
Yeah, I think that not only are the polls close, but because they do indicate that this could be so close that it would take several days to sort it out. It may also be a contested election in the sense that there will be a lot of legal moves by both sides challenging some of the results. So I don't think we're going to be lucky enough to just have a clear signal of who's actually won here. But we are going to, I think, have a good sense of what's going on in Congress. And I think we will find that the Senate has gone Republican and the House has remained Republican. So that means that if Harris wins, she's going to have a gridlock, divided government. If Trump wins, then we're going to have a sweep and he'll be in much better position to get his policies through.
And I guess that's exactly what the markets have reacted to. They're, beginning to trade it, I guess, in that sense, because the move that started last night on equities and what we're seeing right now in the bond market with the US 10-year at 4.4%. And again, I think futures are still saying another 400-point pop. But it is early, I think, and those leads can change. And we've seen that with our election here in India. The first hour trends were very different from the middle of the counting and by the end of it. So it could really go all over. Arvind, great to have you on. Let's talk about the market move here and now. And what do you make of it? Going by these leads, equities are rallying, bonds are falling because they're worried about higher deficits. The dollar is surging. What do you make of it all?
Well, I think the market is clearly betting on a Trump victory, because if you look at the betting markets, the probability is now moved, 75% that Trump might win. This morning before, any counting started, it was, close to 50-50, maybe slightly favoring. So I think what has happened is that if people are looking at the data closely, for instance, Virginia is a state that President Biden won by 10 percentage points, and it's much closer in this election. So a lot of different data points are suggesting that although it'll take a while to count some of the key swing states, and we may not know the final results till tomorrow, the trends are all pointing to the fact that unless there is some shocker, in some of these swing states that have yet to be counted, that the probability of Trump winning is much higher. And clearly the Senate is going to be for sure Republican. That looks like almost a done deal. And the House, I think, is probably headed that way. So I think the markets are always a probability game, and the market's already putting in a reasonably high probability that it's going to be a Trump sweep. It could be surprise. It was surprised, let's be clear, in 2016. But in 2016, by this time or a little bit later, we knew that Trump was going to pull off an upset. So for Harris to now win, it's going to take some real surprises in some of the later data. So I think the markets are going to trade today for the rest of the night in the S&P futures, and I suspect in global markets on that assumption of a Trump win.
All right, Arvind, how do you approach the Indian markets, though, assuming that Trump comes in? The last time around, there were some issues with regard to the H-1B visa. Some rejection rates went up as well. So, at some part of the markets here, I believe that could be a bit of a headwind. We'll have to see how that plays out. While you have, other smaller sectors, solar cells, modules, you had a big amount of exports from India. How does it change, the approach to various sectors here in India, depending on who comes in the United States?
Well, Trump is more protectionist, so he is going to look for maybe on the outsourcing or other things, try to put incentives in place for U.S. companies to outsource less, whether it's manufacturing or it's services. I think he's more focused on manufacturing, less focused on services. But there could be headwinds on that front. So I think that would be an issue. But I think his main focus is China. So India could actually benefit to the extent that he put 60% tariffs on Chinese imports as he's threatened, or a much higher number, whatever that final number ends up being, that would benefit other countries, even if he puts a across-the-board tariff across the world. I think China would be his main focus, and therefore India could be a beneficiary of that.
Well, since China will be his focus, there could be a disruption in the metals market as well. How do you see things pan out? The last time around, there were some shortages in various commodities, and that's what led to, some price spurts occasionally, but demand as well got hit. So how do you approach the metal space? Because that's going to clearly be in focus. Dollar index, some tariffs on China, and global demand as well could take a bit of a hit.
Well, it's tricky because China, 80% of the rare earth processing and supply comes from China. So China could yank the chain of, the West by turning off rare earths exports. So there are many things that are cross currents in terms of what might happen out of it. He will put tariffs on steel imports. So, Chinese steel doesn't get dumped into places like India. Does the Indian government try to protect its own steel industry? So these become, second and third order equations, which we'll have to watch how it plays out. But I think, needless to say, there will be turmoil, there will be disruption, there'll be volatility. And as investors, we have to figure out how to wend our way through that volatility. But suffice it to say, there won't be one direction for all metals. Some metals, China will have more control of supply. Some China is an exporter of, like steel, and it'll try to put more steel out elsewhere if U.S. puts tariffs. So it'll be interesting to see how other countries react to U.S.'s actions. Do they protect their own industry?
Yeah, no, absolutely. Ed, what's your view for markets like India, emerging markets? What does a Trump win mean?
Well, we're all focusing on the elections, but I think that the markets have actually been responding more to what's going on with the U.S. economy. It's turning out to be stronger than was widely anticipated. We thought that that would be the case. And we also did not expect the Fed to go by cutting the Fed funds rate by 50 instead of 25 basis points back on September 18th. When they did that, we immediately concluded that the economy might be stimulating an economy that doesn't really need to be stimulated. And the bond market seems to agree with us. September 16th, the bond yield, the 10-year, was at 3.65%. Now, as you pointed out, it's already at 4.40%. And some of it has to do with the perception that fiscal policy is going to remain excessive no matter who wins. But I think a lot of that also has to do with the fact that the economy doesn't need the Fed to keep lowering interest rates. And here on Thursday, they're widely expected to cut the Fed funds rate by 25 basis points. I think there's going to be more than one dissenter on that vote. But meanwhile, the biggest dissenter is the bond vigilantes who've pushed up bond yields here. And I think at some point, this is going to create some issues for the stock market. So I'm not sure that the stock market's going to rally much between now and year end. And I think the elections, clearly will create some volatility in the short term. But it's the U.S. economy and the Fed that I think will be critically important here in how the markets perform.
But in the very near term, Ed, to press my question, emerging markets, a Trump win, it's positive or negative for EMs and stock markets?
I think the question obviously relates to what happens to interest rates. The Fed matters a lot, and this backup in bond yields suggests that that's not good for emerging markets. The strength of the dollar is not good for emerging markets. So, and then I think the ongoing weakness in China is not good for emerging markets. And so I think overall, the emerging market sector is going to underperform the U.S. stock market, maybe the European as well. But that's the way I see it. India, of course, has been an outlier in a happy way. And I agree with Arvind that, in fact, if Trump wins, he'll be focusing more on slapping tariffs on China. And I think the United States has a great interest in being a closer ally with India.
Ed, just a very quick question. I think we're all already over time on the chat, but 30 seconds. Given what the bond market's doing right now, this move on the 10-year, the 2-year, 4.4%, which should get the yields back up, really, and what the bond market is telling us, with this kind of a surge in yields, you think that at 25 basis points, of course, that was always a probability for this week.
Yeah.
But do you think 50 basis points comes kind of back on the table as well? Because, I mean, before this kind of, electoral possibility, a lot of people were wondering whether the Fed has been way too aggressive. Do they even need to cut that much? But now with yields doing what they're doing, yeah, please go on.
I've been in the camp that said that the Fed doesn't need to cut interest rates. The economy is doing just fine, and I think the fact that they cut 50 basis points, and ever since then the 10-year bond yield's gone up by 70, almost 80 basis points, that suggests that the bond vigilantes are doing something you're not supposed to do. The saying is, don't fight the Fed. Well, maybe the Fed has to consider that it shouldn't be trying to fight the bond vigilantes. The message from the bond market is tone cut.
Okay. Message from the market is don't cut. The Fed's been talking about, I mean, the expectation is 25 basis points this week itself. So let's see. I think we are in for a very interesting finish to the week. The story isn't over as yet, for sure. Thank you so much, Arvind, as well as Ed, for joining in and giving us your perspective. And of course, I think we'll have to just wait a while longer because there's just too much moving right now in the markets.
Well,